The banks are on a charm offensive to clean up their reputations after a scathing report from the Royal Commission. But what will the inquiry's recommendation mean for everyday Australians?
I sat down with Sunrise consumer correspondent Sean White to work through some of the big issues for super insurance and lending money. Sean, definitely some challenges and changes ahead, aren't there?
Yeah, there sure are, Kochie. And not just for the banks, we all need to take a closer look at our own money habits too.
The Banking Royal Commission exposed a culture of bankers behaving badly.
The snapshot from the Royal Commission is that they're saying to the regulators, crack down on banks more. You've got the power to do it, you haven't been doing it.
Customers too wanted the banks held to greater account.
To be honest, the crooks.
I think the banks really need to change their culture and really need to look at the ways that they support their customers as well as shareholders.
I guess I trust them a little bit less.
I don't know that trust's the right word. You have to use them, don't you? Let's hope it's given them a bit of a shake-up, because they certainly need it.
The final report did recommend a raft of changes, 76 of them in fact. And who better to explain the impacts than Kochie?
Well, Kochie, what do the recommendations mean for people buying a home?
Accessing home loans could still be difficult for those people who don't watch their money. We're sort of in a credit squeeze at the moment.
At $1,450,000, so congratulations and well bought, sir.
They're cracking down on mortgage brokers as well. Now, mortgage brokers say this will reduce competition amongst lenders, and so you may not be able to get the better deals that you could in the past.
There are some positive changes for our super though.
The big issue at the moment is many Australians have multiple superannuation funds with little bits in them because they've had a casual job here or a casual job there, and it's all being eaten away by fees. That will all be consolidated now. Good news in super.
The Commission took a big stick to the insurance companies too.
Insurance has got to be more transparent. That's going to be good for us all. Hopefully lead to lower fees as well.
There were also recommendations for greater customer protection.
People who have suffered misconduct from their bank can take it further and get compensation.
But as a result of these changes, there are new traps to navigate.
The upshot of all these crackdowns is that households are now highly vulnerable to, one, making the wrong money move, and two, something going wrong in their personal circumstances.
Nicole Pedersen-McKinnon is a money educator with a few tips on avoiding trouble in the brave new banking world.
Watch your spending before asking for money. If you want to apply for a mortgage, you need to seriously cut your spend in the 3 months before, otherwise you might get denied or approved for far less nowadays. I never thought I'd say this, but think so carefully before reducing your credit card limit. New rules mean that you have to be able to clear the entire limit with 3 years of disposable income. If you cut it down, you may never get it back. Don't lose interest in your interest-free loan. This is probably the last one you're going to get. You will be rolled over to a principal and interest loan when this period ends, and that could see your repayments leap up to 63%. Get ahead now. Be careful about what you post online. So insurers are now paying attention to this stuff for claims payout, investigations, or even for setting premiums in the States.
So while the recommendations of the Royal Commission aim to change the banking culture, there will certainly be some changes to our behaviour too.
With the credit squeeze on, our spending is being watched more closely than ever. So if you are in the market for a loan, the best advice is to cut those unnecessary expenses like TV or music subscriptions, Uber Eats and Afterpay at least 3 months out from applying.
Yeah. You've got it's called the home expenditure monitor. So banks look at your budget, ask for your budget, check whether you're sticking to it, and want a budget for the next 12 months, and they want you to stick to that as well. So 2 years ago, they just hosed money at everyone. How much do you want? They didn't care. Now, pendulum's gone the other way.
So, Sean, stop the Uber Eats.
Come on, guys.
Now.
Okay.